Good morning, ladies and gentlemen. This is Butch Shorak. It's Options University. It's Monday, November 5th, 2012, one day before Election Day, and this is Market Forecast. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We are not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Looking at the SPX last week, we saw that we basically went nowhere, and we did have some decent numbers coming out of economic announcements. Basically, it took place at the end of the week. Jobless claims basically came in better than was expected. And let me set up the highlighter here. There we go. Good. And so, but notice that every week, in spite of the fact of what's reported the week before, they are always downgraded the next week when they put in their corrections. So jobless claims look good. We had pending home sales were fine. GDP came in better than expected. Consumer sentiment was not bad. Everything looked good for the week. Now, what do we got coming next week as far as economic announcements? Let's take a look at the week to come. And as we look at market forecast, we see that Monday morning, 10 o'clock, we got ISM, non-manufacturing index. Certainly hasn't been known to move the market. Absolutely nothing on Tuesday. Nothing much on Wednesday. Come to Thursday, jobless claims at 8:30 in the morning, which we have every single Thursday. And then Friday, we have a more interesting day as we have consumer sentiment coming out just before the 10 o'clock time. We got import and export prices at 8:30, and we got wholesale trade coming in at 10 o'clock. So most of the good news is going to, or most of the news is going to come in on Thursday and Friday. But then there's this day. Let's put a star there. It's called Election Day, and we fully can expect that this is a day that absolutely could end up moving the market. So what is it that we're looking at? What is it that we can expect out of the presidential predictor? And so let's take a look at the SPX and see exactly what's been happening as we look at the SPX chart. And we see that if we look back over the last 3 months, we definitely had an uptrend until we got to October. And then notice what happened in October. We had a change take place due to presidential debates, due to some reality checking. And we see that what happened was we started going sideways to down. Well, actually, we're in a sideways trend with a down cycle in that sideways trend. Now, when the incumbent is elected, 80% of the time the market will go up in the 3-month period prior to the election. Now, what we're seeing this October is where the market is telling us that there's an excellent chance that Romney could win. If we look at the polls, that actually turns out to be about a flat, even toss-up is who's going to get elected. So Tuesday will be an interesting day for the market and certainly could have an effect on the market after it happens. Personal opinion is that we could end up with a little bit of a knee-jerk reaction, but you know what? The corporation's been doing a great job of running their businesses, and what we will see is we will see corporations that will react to the issue of who the new president is, and they will react differently. One might create growth, one might create pulling back in some of the money and not expanding their labor force, not expanding their expenditures, not looking at more research and development. And the market will tell us what this is going to be as we look at the net result out of the market. See that we closed the week at 1414. We had a bounce up on Thursday with the good news out of the employment numbers, out of the housing numbers. And then what happened is Friday we gave it all back. Went back down to almost the low that we had on Thursday. Overall for the week was a shortened week, only 3 days in the week, which hasn't happened very many times throughout history because of the Hurricane Sandy. But ultimately, if we go back to the last 6 trading days, where are we going? We're going sideways, waiting for the election, waiting to make a decision on who is going to be the next president of the United States and who's going to run the regime that the presidential candidate can actually have a great influence on the overall economy. All right, looking at it closer, we see that there was no market on Monday. There was no market on Tuesday. Looking at the S&P, you see that we're close to getting across here. We're sitting on support at 1406. And we'll see whether we're going to get a bounce. We'll know more on Wednesday morning, Wednesday afternoon to see which way this market intends to go. S&P spending time above the 200-day moving average. And last week was a week that basically went nowhere, much like what our expectations were for the market during this week. Looking at the Dow, we see a very similar situation, closer to the 200-day moving average. Again, going sideways, going nowhere, and waiting for that all-important election to take place. Looking at the NASDAQ, we see just a little bit different picture as we saw a little more weakness in the NASDAQ. It did kind of go sideways, and then look at that gap up on Friday, and then big pullback all the way back down to that 200-day moving average. And notice we've spent some time below the 200-day moving average on the NASDAQ. Will the NASDAQ lead us up? Will the tech stocks lead us up? We'll see what happens with the election. It is very, very important to us. Looking at the Russell 2000, we see a very similar situation, except look at that outside day. A classic look as the Russell looks like it's going lower. But remember, news overpowers everything. Looking at the indexes for the week, we see that very little change in the indexes. Minus 0.1, minus 0.2, up 0.2, up 0.1. Looking at the Dow, the NASDAQ, the S&P, and the Russell. So as we see, basically a flat week going basically nowhere. And we see that for the year, we're still up for the year as we had a great 3 months, 4 months run from the summer. And we see we rallied right into this election until we got to the month of October. And then all of a sudden, market went from going in this direction to going in this direction, going sideways, which would be an indication that Romney could be the man. Truth of the matter is, it's hard to say who's going to win this election, but we see that the NASDAQ up 14% for the year, S&P up 12%, Dow up 7%, and Russell 2000 up 10%, as we're in that sideways trending market. Haven't seen much fear in the market. As we look at the VIX, we see that it's spending its time between the 20 and the 15, with a bit of a rise on Friday as the market pulled back, but still just around the midpoint on what would be our normal range of the VIX, and we haven't seen any great surge in the month of October out of the VIX, but we certainly could have one after the election. Be careful of this time for you short-term traders, as it definitely provides some added risk to the market. Tuesday is the day. Next, taking a look at the bond market, we see that in spite of all that was going on with the stock market last week going sideways, we've had a little volatility in the bond market. Notice we're in a down cycle, and this we talked about as a potential trade with us getting lower lows and lower highs in the bond market, as the market basically is pulling back and has been in a pullback since August. Now let's take a look at, that was TLT, by the way, the ETF we looked at for our bonds. Next we're going to take a look at the financials, and we see that the financials up in a nice little uptrend and showing more strength than the S&P. As we see, we're getting higher highs, higher lows as this market just keeps chugging along. Very favorable results out of the QE3 for the financial markets. And this in itself could lead the market up as if the market feels good about our new president. Next, let's look at oil, see what happens to oil, the monetary funds, which is basically, I call it a monetary fund because it is such an international way to look at monetary creation as far as international trade. We see that oil, where's it going? Nowhere. Going nowhere fast and very far away from that previous high that it had earlier in the summer. Next, let's take a look at that safe haven, that sector which we call gold. And looking at gold, we see that big pullback on Friday. So as the market went down, so did gold. Interesting. Where is that inverse relationship? And we see what? It did it on pretty decent volume as we see it pull back. Long way from that $1,800 mark when it was up at that level on the GLD, which is our gold ETF. All right, let's take a look at see what kind of volume we had on the SPY on Friday as we had this pullback. Was it something that was convincing that we were going to pull back a lot further? Well, you see, we had a little bit higher than average volume, but not much, as we had this pullback, giving back everything that we gained on Thursday in this trade shortened week, which seldom happens. So it was an interesting week, and now what we're looking at is a week to come. Again, big major news. It's an election, and it will affect the market more than likely. So those of you that are gold members, stick around. We'll look at our stocks to watch. For those of you that are not and would like to see more free videos, go to www.optionsuniversity.com/free gold. And with that, this is Butch Shorek. This is Market Forecast. We're talking about the first week in October. The first week in November. And this is Options University. Thank you for being here, folks. It is our privilege to help you with Market Forecast.